One Bitcoin move that delivers all the clarity that you need. Oh my. What a day. What a week. What crazy, nasty price action. What's behind it all? We'll get into that and a whole lot more in today's Bit Break. Hey guys, it's Keith Allen. Hope you're having a good day. Hope you're navigating this nastiness, right? This was ugly. This wasn't just ugly for Bitcoin and crypto. This is ugly across markets. This was ugly for the S&P. It's ugly for the Dow Jones. It's ugly for the NASDAQ. It's ugly for gold. It's ugly for just about everything but oil, I think. And that may be in jeopardy now too. We'll see. Gosh, I mean, like, I knew we had, I knew we were in a bear market, obviously, and I knew that we had some signals telling us that today was going to be likely a red candle. But I'm not going to lie, I didn't really expect to see this happen to this level, this fast, ahead of the monthly close, which is literally just 2 days away, right? So we're going to talk about a couple of things. We're going to talk about some of the things that influence this price action across markets. We're going to talk about maybe dispel some beliefs about some of the potential catalysts that could be driving price. And we are, and we'll talk about the ones that are driving price for sure. And we're going to look at the charts and, with all this stuff going on, the geopolitical stuff, the rally in commodities, meaning metals, the, stuff that's happening with tech stocks, the geopolitical tension in the Middle East, all of it, all of it's messy, right? All of it really equates to noise that makes it difficult to find the clarity, but something that makes it very easy is what happens in the charts. So we will, of course, spend some time looking at the order book and order flow dynamics that impacted today, and every day for that matter. And we're going to look at some key levels on the charts that are really going to clear. If you have any doubt, if you are just unsure of where we are in the trend at this point, this is going to clear everything up. And I'm going to give you a spoiler alert right now. Look me in the eyes. If you're a hopium addict and you think that tomorrow starts the biggest bull run of your life, then this is your intervention. Oh boy, oh boy, oh boy. Well, before we climb into it, though, real quick, a little bit of housekeeping. Number one, hey, how you doing? If you're new, my name's Keith Allen. I'm a full-time trader. I'm a work-from-home dad. I'm a girl dad. And I am co-founder of Material Indicators. I would love to have you engage with me here in this here chat, in this here live stream. The live chat is open, and these are always way, 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 way better when you are engaged with me. It's better for a bunch of reasons. One being, well, I kind of, tailor the content towards what you're interested in. And number two, it makes it more fun for me. So there's some stuff here we gotta get into. And I guess let's not waste a whole lot of time getting there. It looks like I actually already have, just again, just real quick, do me the favor, help me grow the channel, smash some buttons, hit the like, hit the share, hit the subscribe so you never miss any of the alpha drop alpha drops I give you guys on the regular. I'm gonna give you a minute to share and invite some folks into this thing so we can grow this channel. That'd be greatly, greatly appreciated. So, Bakamati is asking if I am in a long position in Bitcoin. Good question. I will tell you this. I have been building a long-term position since really I started building it the FTX crash back in 2022. Started DCAing at 15 and a half K and worked my way all the way up. And yes, I bought up into well into the hundreds. And I also sold well into the hundreds, right? Sold in that, in that 110 to 125 range, bought a little bit up in there. Some of it I've scalped out of, et cetera, et cetera. Whatever the case is at this stage, I have scaled out of a significant amount of my position. I'd say I scaled it back about 65% at this point. And so the cost basis of what I have is quite low. And so I'm happy with that. And I will likely hang on to that. I basically sold everything that I purchased above the 50K line. And so whether or not price dips back below that level or not, I didn't want to give it all back. So I've scaled out of my position. I got dry powder for whatever's coming. And so Artbeat says, hey, been a rough day. Yeah, been a rough day. About to get rougher for some folks in certain hotspots in the in the geopolitical landscape. It seems like. Just saw across my news feed, the supreme leader of Iran has hopped on his plane and headed for Moscow. So he just fled the country, and there is a significant amount of U.S. Firepower in the region. So there's that. Not going to make this a political discussion by any stretch of the imagination. So I'll just leave it right there on that subject. Let's start by just taking a peek at what is happening literally across markets, right? Stock market has been making all-time highs. Gold has been making all-time highs. Silver's been pumping. I mean, like everything's been pumping, but crypto. And today everything got a haircut. And that haircut seems to continue, certainly for Bitcoin. So let me share this one for you. Let's start. Let's start right here. This is Bitcoin is the top one. This is the S&P is in that number 2 spot. Dow Jones Industrial Index, NASDAQ Composite Index, all down here on the daily chart. You can see trend precognition signals, down signals on each of them. And, a signal does not necessarily mean that price is going to tank. It just is an indication that there's a low probability that price is not going to exceed yesterday's high. So as you can see, the biggest sell pressure obviously coming for Bitcoin, currently almost 6% down on the day, whereas the S&P down 0.5 point. Dow Jones recovering a little bit from this dip, kind of a doji candle near flat. NASDAQ down 1.25 points at the moment, with still a few hours to go before the market closes. And of course, we have a monthly close coming up on TradFi tomorrow, monthly close coming up on Bitcoin and crypto on Saturday, and then a weekly close on Sunday. And so it's always, kind of a normal thing to anticipate some volatility around those monthly closes. We have profit taking, we have tax loss harvesting, we have all of these things happening. We have options, expiring. And so I posted this morning something about, what we saw in the charts, and was really thinking that we would see a little jockeying. We had, let me see if I can actually find that post. And we could go to, which was, I think I put that on the material indicators page, um, because that has obviously changed by now. Um, So yeah, I posted this morning, and we had all of this liquidity, as you can see, here in the 85 to 87.5 k range. 87.5, very significant. That's the yearly open, 2026 yearly open timescape level. And so this has been getting tested, as you can see, for a few days. And going back to last week, we started testing this, right? And breached through it last Sunday, breached through it on Monday, but both days recovered. Wicked through it on Tuesday. Yesterday looked like we might go after a resistance test, and didn't even make it to the 21-day moving average. And now look at this big nasty red carrot stick, or whatever you want to call it. So we got that. And now in terms of how we got here, in terms of like the news that maybe was behind this, obviously we knew there's geopolitical tension in Iran, and the U.S. jockeying for position there. We know that we have some domestic tension here in the U.S. with what's happening with the ICE raids and in Minnesota. The Trump administration trying to de-escalate that. It seems like his playbook is pretty much the same everywhere he goes around the world, including here at home, which is push the limits, push the limits, push the limits, freak people out, then dial it back a little bit, and they go, oh well, okay, maybe that's not so bad. Well, that's continues to just move the line a little further, a little further, a little further, right? And so we have a potential government shutdown looming here, or a partial government shutdown looming here at the end of the month if Congress doesn't agree on funding. And obviously, some of the tactics ICE is using are a sticking point for Democrats. So we'll have to see if they can work that out in the next couple of days. So that's obviously something that has people kind of pissed off and concerned. Then there is the stock market. This is like, let's see. So the reports came in today. Microsoft had an earnings report. Lots of concern about whether or not their investment in AI is going to have a decent ROI, because they're just, quite frankly, not seeing the returns they expected as soon as they expected. So there's some concern there, and that concern is not, I don't think, exclusive to Microsoft. There's likely contagion from that, and so there's obviously that's a big issue. Billions and billions of dollars have been invested in AI so far, and so those concerns about the AI infrastructure spending not yet translating into Microsoft's Azure cloud growth is going to take some time to resolve. So in terms of like the geopolitical thing, oil prices at multi-month highs. Obviously, we knew the Fed wasn't going to cut rates, but oil prices at high prices means energy, means production for lots of businesses, and including Bitcoin mining, which requires energy, and including chip manufacturing and manufacturing of everything for that matter. So those are all kind of concerns that play into the macro setup. S&P, NASDAQ, all been pumping. And at some point in time, that structure has to, it has to has to pull back a little bit. So maybe as we're here at the, approaching the end of the month and we have all of these little fires popping up, some investors saw that as a good time to take some profits. Same with gold, right? Gold and silver have been soaring, soaring, soaring. And gold took a big haircut today as well. So all of this just kind of compounded and turned into a cascade across markets. And I don't know if anybody's feeling the brunt of it worse than um, Bitcoin right now. Well, alts, I'm sure, but I'm not even paying attention to that. I do want to take a quick look and see what ETH is doing in this moment because I've got some targets I'd like to get hit on ETH as well. Um, so yeah, here we are back down at 2,800 on ETH. So that's interesting, and just maybe we could get down here would be really really good as far as I'm concerned. So when I say down here, this is the 200 week moving average, currently trading around 2,500, which has historically been a pretty good spot. Um, Even if that doesn't end up being the bottom, it's historically been a pretty good DCA spot on ETH. Um, so there's that. But as you can see, I have a trend line that goes much lower down to the 1,500 range, which would be that'd be sexy. I'd be okay with that. So those are some things to pay attention to. Now let's head over to the Bitcoin chart. And one of the things that I posted this morning was that, somewhere around this analysis, um, in this analysis, we talked about um, having daily, weekly, or monthly candle closes above or below that yearly open. If we close above the yearly open, then that continues to fuel hopium that will at the very least see a relief rally that could test some resistance levels. And you never know, at some point in time, one of these relief rallies are going to turn into or develop into a bigger move, a bigger macro move that tests resistance at key levels and gets us back to a bull market. Do I personally think that that is going to happen anytime very soon? No, I do not. But I don't speculate. I let the charts tell me what is going to happen. And what the charts are telling me right now is this, as I stated earlier, is the gateway to paradise. And we are currently running through the gates. Now, something else I've said quite frequently, it's not how you start, it's how you finish. And you'll notice in that post, I said candle closes, right? So we got a long way for these candles to close. We have technically, obviously, we have a D candle every day, but we have the monthly coming up Saturday and the weekly coming up Sunday. Those are really last chances of hopium for any sort of relief rally, in my opinion, at least from this range. So here's the cold, hard reality for anyone who still is confused about where we are in the trend. Anybody who is clinging on to hopium that when gold tops, all that money is going to rotate back into Bitcoin. It's not going to work that way. Now, there may be a case where when gold tops and or when Bitcoin more realistically, not when gold tops, because gold may have already topped and we sure as shit ain't seeing that money roll into Bitcoin right now. When Bitcoin finds its macro bottom is when we will see some money rotate out of other assets, including metals, back into Bitcoin. We will see more alts rotating back into Bitcoin. I think there's alt holders are hanging on to hopium, maybe opium too, opium and hopium to see if they can, get that moonshot. And there will be some alts that do well. But I think this market is maturing and that I mean, we have tens of thousands of alts that, quite frankly, don't do shit. And, that's why we call them shit coins. And they're taking market share away from Bitcoin and ETH and any other asset, any other project that actually does something and has a wing and a prayer of ever becoming something sustainable. So we're going to see that happen. And as these institutions are coming in, they're not focused on every shit coin. Okay, they're looking for quality. And so that brings me to the Clarity Act. You want some clarity on the Clarity Act? We're seeing all sorts of noise out of the hype channels on X that say, "Oh, Clarity Act's going to get signed, and it's going to be the biggest thing ever, and Bitcoin's going to moon." Well, the Clarity Act is a big deal, no question about it. It's huge, huge. We've been waiting for it for the longest time. I've been doing this since 2017. I've been looking for clarity out of the U.S. regulatory environment since I started. But now that we have a crypto friendly administration, we have the Genius Act was signed back in, I think, June, July, and uh, and the Clarity Bill went through the House, but now the Senate has to have their version. And so there was supposed to be a session on it last week. It got postponed, maybe even 2 weeks ago, that Coinbase pulled out of because of the whole issue over stablecoin yields. And then it was supposed to be scheduled earlier this week, or a few days ago, and they had a snow day, so they couldn't get in to work on it. And then it's supposed to happen today, and now there's supposed to be meetings next week between Trump and the crypto industry and the banking industry. Blah blah blah. Noise, noise, noise. Here's what I understand so far. I understand that there are actually two versions of the Clarity Act that are being proposed. One comes from the Banking Committee, one comes from the Agricultural Committee, and they're slightly different. And what is likely to happen is elements from each one are maybe going to get merged into one bill. So this meeting, this stuff that was supposed to happen around the Clarity Act over the past couple of weeks was never intended to be like the vote. It's a markup. It's where they make notes and say, "Yeah, we're good with this. We're good with this. We're good with this. We're not so good with that, but we're good with this. And let's rework that," and et cetera, et cetera. And obviously, most of those provisions were things that they had that have been negotiated behind closed doors before we got to this point and before they will ever get to a vote. But it's kind of like getting aligned and making sure everybody's on the same page and airing out any concerns. So, in other words, the too long didn't read version is this thing isn't happening like this week. It's not happening this month, and not likely going to be done next month. It's going to take time for this to, number one, for all parties to come to an agreement. Number two, for the legislation to finally make it to a vote, and number three, for the president to sign on it or sign off on it. So there's a lot of moving parts. In other words, after the meeting, whether it happens today, tomorrow, Monday, next week, next month, it's still not going to be an instant shot to the moon. What is good in terms of the macro overview and the fundamentals around this Clarity Act is, number one, regulatory clarity for all parties. Number two, certain parties, namely banks and big institutional investors, have been waiting patiently for this to happen. And they will wait as patiently as they need to for it to happen before they really start coming in with big money. When that money starts to flow, yes, it will start to gobble up supply. And it is understood that that will help drive the price of Bitcoin. But I think that what we're also going to see is more stability in Bitcoin price. As it becomes more of an institutionally traded asset, um, some of that volatility is going to get compressed. And so, call it what you want. You can say institutional is ruining crypto, or you could say crypto is maturing. Um, However you want to look at it, do whatever, do whatever serves you best. But the reality is, things are changing in this market, and you need to be aware of that. So, in terms of where we are and why I say this is a validated, multi confirmation, with multiple confirmations bear market. Let's just roll back in time, and I'm going to turn off trend precognition to simplify this chart a little bit. And so, the first thing is, while I have it up, this isn't the first. This is actually the most recent confirmation. So if the first three confirmations weren't enough for you, then there was a fourth. And if the fourth wasn't confirmation enough for you, then this is like the fifth or sixth or maybe seventh. We can count during this if it makes you feel good. So losing this timescape level, this is the yearly open, right? 2026, January 1st, 2026. That was at just around 87.5K. We don't have a close here yet, right? I would even be inclined to give it until the weekly close for that to be a confirmation. But right now, not looking great. And even if we do recover and get a rally here, until Bitcoin reclaims all of these moving averages, all of these daily moving averages, then we're still not in a bull market yet. And in fact, I'd say we can't even entertain the thought. We can't even have the conversation about whether this is a bull market recovery until, at the very least, price reclaims the 50-week moving average here, which, as you can see, was recently death crossed. And so that's not a standalone. Reclaim the 50-week, and we get the RSI weekly closes above this 41 range here. So again, that's not looking great right now, is it? So now let's rewind things a little bit. And see how this all started. And you can, I guess you could pick what you want to call a confirmation. I will show you what I call a confirmation, or a series of confirmations, or conditions that lead to those that led to those confirmations for me. Okay. So first of all, we started to see first sign of a problem, and this may look familiar to you, was we had a breakdown, we had a death cross here back in August. It did recover. Price did recover briefly before a new all-time high. And then we had a breakdown where the green 21-day moving average death crossed the 100 and the 50 moving averages. And if that wasn't enough, it then death crossed the 200 moving average. Those were all bad, bad, and bad. So that's one series. This was the first. I would say this was the early warning. If this wasn't enough of a confirmation for you, then you got it here on the death cross below the 200. Now, notice we had a resistance test back up here, and that was rejected, and things came back down. Notice some similarities between this and what happened back in 2019. 2019 or 2021, excuse me. 2021, we saw the death crosses, we saw the recovery, a new all-time high, and then a breakdown. So I think that there are some similarities to what we're seeing right now. Let's see if this helps. Some similarities to what we're seeing right now back towards 2021 and the bear market of 2022. And that's kind of like this, right? Boom, recovery, new all-time high, and here comes the breakdown. So that was one set of confirmations. Then we saw yet another set of death crosses between the other moving averages. And that's when we saw the 50 break below the 200. Then we saw the 100 break below the 200. And this was, so you got early warning, confirmation, second confirmation, third confirmation. That is if you didn't already count this as one. So this is 3 or 4, depending on how you want to count it. And now we had a bit of a, a bit of a fake out here where we recovered briefly, went ahead and tested resistance. Remember, we saw this before too, back in 2021, when we tested resistance, albeit it went higher, we tested resistance before breaking down further. And so we got that. Here we are now. We have a death cross that recently occurred. As you can see, we have, we had a golden cross on the 50 on between the 21 and the 50 on the daily chart, which gave us that rally, right? This was kind of a sign of that rally. It didn't give us that rally. It's a lagging indicator, but it was a sign of that rally. And then we golden crossed here, a week or two ago, mid January. And now I want you to notice something that's happening on the daily chart. We have, I'm not going to say this is imminent yet, but let's just go through this exercise and see what this looks like. Let's just say that these moving averages extend like so. Okay. And this one, and I'll even do, let's make it a dashed line. And this one is going to extend this. May not happen so fast. And obviously these trajectories can change because these moving averages change. Might take some time for this to develop, but if we stay in this trajectory where price is continuing to grind lower, then there's a good chance we see these death cross once again. And so if we were to stay on the trajectory that we're on right now, that looks like it would happen roughly around the first week or so of February. And if that does happen, you can expect that to be like fuel for the next leg down. So this is something we're going to watch. But so far, like I said, we have 4 or 5 confirmations of a bear market. And then the last one being that we are dealing with this timescape level right here. And so, I can see a situation where this, this trajectory maybe alters a little bit. It takes a little more time for this to play out. And these moving averages are somewhere around this yearly open. That would be a very, very strong level, whether it's resistance or support at that time, for price to break through. So that's something that we've got to watch very, very closely. But at this stage, there are at least five, if not six, confirmations, depending on how you like to count them, that we are in a bear market. And one more. This is actually this was actually one of my first things, and that is the weekly RSI. If you will notice with me, the weekly RSI, anytime it breaks below this 41 level, okay, um, that is an indication that we are in bear market conditions, right? Let's just look through history and look at how price reacted every single time that the RSI had weekly closes below that level, right? Look at this. Down, tried to recover here, rejected, bear market extended, tried to recover again, rejected from the 21-week moving average, went back down, grind, grind, grind. Finally, a recovery back in June. That was way back early cycles, right? That was 2015. Then we see recovery, and then it doesn't happen again until 2018. So 3 years before that happened again. And this time, same thing. Look at this. Price was rejected at the 21-week moving average. Bear market nastiness, consolidation, and then a breakout in 2019, reclaimed that 21-week moving average, and then climbed out, reclaimed all the other moving averages, and we had a nice run there to the 2019 top, which then here we go. This was a brief one. This was actually the COVID crash, so this was kind of an anomaly, but nonetheless very indicative of the price action, right? This was a bit of a precursor, if you will. It was a fake out, right? There was a recovery here, but then price tried to break out again, tested resistance, was rejected. This was after the 2021 top, right? Notice when these are coming. After the 2021 top, this was the first indication things were going bad. And price rallied back briefly, and then came the bigger breakdown. And these, with the exception of this, which was an anomaly from the COVID crash, these last a while, right? Like, could be 5 months, could be 8 months, could be a year plus. And so that's what you need to be prepared for. Looking here, 2022. Oh, is this the one we just talked about? Yeah, coming off that 2021 top, right? And look at this. So this was what, April 2022, and we ground down, started to consolidate, and this was the FTX crash right here. That was what, a 22% candle? Geez. Consolidation, and then the breakout back above the 21-week moving average, and recovery. Okay, so what was the dates of this? We said what? April, May, June, July, August. April, May, June, July, August, September, October, November, December. Took till January, like 9 months until that recovery. So that's why I don't think that, if we get something, miraculous, unless we have just like a miraculous catalyst that turns the whole market around, then I don't think that we're going to see a quick recovery to this, which is why I'm not rushing to ape back in, right? I'm trying to take some scalps, take some trades, and stack a little more powder to buy more as we go lower. But I think we're going lower, and I think we're going significantly lower from here. So I can show you this, time and time again. We had this breakdown here in November of this year, and we got a confirmation with, monthly closes below this, weekly closes below the 50-week moving average, and That for me was like the confirmation of the bear market that we're in now, or another confirmation of the bear market we put in now. So that would be like this was actually the second of six confirmations that we're now counting here. Um, so in my opinion, it's undisputable that we're in a bear market here. And now look what's happening, right? Where this candle is in jeopardy of losing the 100-week moving average. And I say in jeopardy because we're on weekly candles. It's the closes that count, right? So there's still a chance for this to recover and this to just become a wick. But until we reclaim this stuff up here, we can't even talk about a real legitimate run at recovering a bull market. So if you are clinging on to hopium, I think it's time to face reality. I don't think, I'll just say it's time to face reality and let go, because you're gonna get wrecked. So here we sit. And somebody had asked me this morning what I thought about, this whole situation, and they were in agreement with me that we're in a bear market, but I was and have been reluctant to short before we lose this timescape level, and so I'm looking for a confirmation that this level is indeed lost. And if we get to the monthly close without a recovery here, then I'm going to strongly consider, taking a short here. Again, and unless I see something in the liquidity dynamics or the order flow that makes me think something's going to be different. Now, let's talk liquidity dynamics and clues that we had that something was changing. So I had posted something about an entity suppressing price, and somebody asked, "How do I know it's one entity?" Well, you don't necessarily know with absolute certainty, but there's clues that we can pick up, right? Clues like when you see blocks of liquidity moving, starting, stopping, getting pulled, getting replaced, and they're of similar size, and they start and stop tip to tail, for example. So, for example, you have a set of asks that came in and stacked on top of what was already existing, right? There's 8 million there, another couple million came in. And it's kind of well timed with aligned with what you see below. That's often an indication. Doesn't necessarily always have to happen that way. But when I talk about liquidity hurting, let me show you what I mean. So this block of 20 million, 19, 20 million at this 91.2K level, I don't think these guys have any intention of getting filled. They placed their order here. They placed the stack of ask liquidity, and look what happened. Price immediately moved down. And similarly here, these guys had no intention of getting filled. They placed it and price moved down. And once it did, I mean, this one technically could have converted into a market order. I mean, look at this cascade here. This is order flow. These are market orders. So everything we see here in the order book, these are limit orders resting on the order book. Everything we see down here on the bin CBD, this is market orders, right? So market orders are what move price, and market orders move price when they cut through the liquidity that exists, or the liquidity gets rug pulled, and it slides through like a hot knife through butter. So just to get an idea of how violent this was and how fast it happened, we saw a dump of, let's take this to the daily time frame. We saw a dump of, let's see, we were at let's call it, oh, here it is. It started right about here. Okay. So we'll call it 65 million. Sure. We were net negative 65 million and very rapidly went negative 352 million. So that's like 200. I'm just going to round it up. That's like 290 million in how much time? 1540, like an hour on one exchange. So that is not typical, my friends. Not typical at all. So that was an indication that things were going bad fast, for sure. So we can often get clues as to how price action is going to react when we spot liquidity movements and see the suppression kind of thing happening. Um, but I'm not going to lie, I fully expected at least portions of this to hold. I didn't expect the whole ladder to hold, but I expected portions of this to hold, at least until we got closer to the monthly close, and that didn't happen. So now I'm wondering if we're going to get a any form of relief rally before the monthly close on Saturday, and potentially a fake out, and a rally comes on, before the weekly close on so monthly close on Saturday, weekly close on Sunday. As you can see right now, at this very moment, we have just about, well, let's go to the daily and get a little more. We have a little bit of bid support here, about 13 million in bid support here, trying to establish a foundation to run it back, at least to some level. Brown mega whales bought, let's see how much they bought. Not a ton. Let's see, they were down 11 million. They bought about 2.5 million. So that's what I'm watching here at this point, right? Is are we going to see some more buy volume coming in, to at least push things back up a bit? If that happens, I would not. Well, let me rephrase that. If that happens, I am not going to treat this as, hey, this was the recovery. The bull is back. Here we go. LFG. No, I'm gonna look at it as an option to DCA my scalp that is currently getting battered and bruised, and scale out of that position. I had already started taking profits when we were up here. So I had already started taking profits on that position. So it has scaled back from what I had. But I still have about 60% of it left. And I'd like it to close green rather than red, because the whole exercise was to stack more powder. Now, I'm going to tell you that I did make one mistake, and the mistake was, rather than relying on the tools, I relied on my own TA to take that trade, kind of in the moment, and not let it close, because I should have just taken it all conservatively, but I was leaving it open to, in case we got that push, that attempt to test resistance up at this level, which is what most of the market has been. When I say this level, I actually mean up at these levels, which is what most of the market has been waiting for. Didn't happen, not materializing for me. So I missed a few opportunities to close that trade, and now I'm paying the price. So we'll see. We'll see if I get to recover that, or if I just got to, take a little lump on it. Again, it wasn't a big position, and I've already scaled out of 40% of it. So the risk management on it is good as far as I'm concerned. So that's where I sit, and that's my perspective of what's going on. If you have questions, or you think that, if you still are not convinced that we're in a bear market, and that this is not going to resolve itself soon or quickly, I encourage you to join. Well, number one, if you're on the live stream, ask me a question and I'll be happy to answer it. Number two, Join us in our Telegram community. I got links to it in the description below. I got links to it on the X page. I got links to it on the Material Indicators website. This is a global group of traders. No moon boys, no shillers, no bullshit. Just a objective group of traders. Different people have different biases in there, and so I encourage you to come join us in there and learn from engage in the discussion, ask some questions, share your thoughts and ideas, and we'll be happy to bounce them around with you. Okay. So with that, I'm going to wrap it up. Again, I'm going to ask you to do yourself the favor of hitting that subscribe button so you don't miss any of these future streams, because I drop the free alpha on you guys on the regular. Going to wrap it right there. Man, I really, really hope for anybody that might be in one of the geopolitical hotspots around the world, including those here in the U.S., I hope everybody stays safe. And as far as your trades and investments are concerned, your financial safety is secondary to your personal health and safety. That includes those of you in the Middle East. And so I want you to take care of yourselves first. The market will be here. It's not going anywhere. And number two, man, protect your portfolio. The idea here is not to get destroyed in this bear market, so that you've got some powder available when we do find those bottoms and you want to buy your way back in. We really do have potential generational wealth opportunities coming across a lot of different asset classes. Keep that in mind. Hope that helps you trade smarter. Have a great day.